This is Scott Becker with the Becker Private Equity and Business Podcast. These are 7 of the stories we're following today. You've got the Becker Business Podcast, the Becker Private Equity Podcast, and thank you for listening. First, the markets surged on Friday on positive comments about the Fed possibly reducing rates. The markets point down a little bit today, though the NASDAQ is holding its own so far. An article in Yahoo Finance, U.S. stocks set for retreat after record-setting rally on Friday. Second, the tech sector is showing some signs of losing steam after a huge run-up. Last week, the sector was down just a little bit, while the other sectors in the S&P and the NASDAQ or the SP were up. Third, 5 of the worst performing stocks over the last 52 weeks. We'll just give you 5 quick ones. Vivid Seats down about 82%. Acadia Healthcare down 71%. Centene, the Medicaid managed care company, down 62%. Lucid Motors still struggling, down 52%. United Health Group down 47%. Fourth, a big story the markets are watching this week is NVIDIA earnings. They'll report earnings after the close on Friday. NVIDIA is up about 33% year to date. It's also at about $4.34 trillion in market cap, so just knocking it out of the park. Fifth, the government is taking a stake in Intel. It reminds me in some ways of the government taking stakes in automakers as part of the Great Recession. We'll see how this goes. I have multiple different thoughts on this, but we do need the ability to manufacture chips here, and Intel has been in horrible trouble and not able to really thrive without lots of government help. So we'll see how it goes. Sixth, retirement savers are eager to invest in private equity funds. A new survey shows they're legal owning private assets in workplace retirement plans. I'll give you my own thoughts on this in a second. I'll give you this seventh. Seventh is the overall return from investing in private equity versus public assets. It is marginally better over the course of a long period of time, very small amounts. But in exchange for that, you have illiquid assets. You can't sell those assets. You're also paying a bigger management fee and so forth. And the thing that people don't realize is there's a huge continuum of success amongst the different private equity funds. So even though, they can do a little bit better, a lot of them do a lot worse, and picking the right funds is very difficult. I'll tell you here, when I first started to invest in private equity funds, I was so excited about it. I thought, oh my God, I've really arrived now. But it's really like the dog who catches the car. You do so and find that the grass is not greener at all, and it's not so exciting to catch the car. So we'll see how this goes. In any event, thank you for listening to the Becker Business Podcast, the Becker Private Equity Podcast. Thank you very, very much.